Hello everybody, welcome back to Metals and Momentum. My name is Anthony, and last bi-weekly report, I was actually writing that report from the train. So if you are new here, then I write a bi-weekly newsletter on Substack talking about markets and investments that I'm currently invested in. And if we hop over to Substack here, you can see that Metals and Momentum, that is me. If you want to check out I separated this newsletter into two parts because I wrote a significant article about Mark Carney's investment strategy. We'll go over that in another video. But the thing that I want to focus just on this video here today is how markets are slipping lower, and here is what I'm doing next. So if we open up this article here, there's a number of different things that we can go to. It actually links you to the Mark Carney article that I wrote. This was a significant article, and I went down through this rabbit hole looking into Justin Trudeau's net worth. And this was kind of interesting, and I'll just tease this real quickly. I was looking at a number of different things that Justin Trudeau actually owns, and I was like, whoa, this is kind of crazy for a former prime minister who only made like $400,000 per year. How the heck does this guy own like all of these cool things? Like there's like 2 yachts worth over $3 million. And then I found out, oh, Justin Trudeau inherited $40 million from his father, but his net worth is $96 million. And I was like thinking to myself, I was like, wait, how does a school teacher, like a former school teacher, he worked at a private school for 8 years prior to getting elected, how does a school teacher who's probably earning somewhere around, realistically, it's probably around like $40,000, but I gave a generous estimate on his salary, and in the article I put, so let's say he's making $90K. That's very, very generous for the year 2000 to 2008. Let's just say he's making $90K, and then during his run for prime minister, and he ran the country for many, many years, 9 years, right? He was making $400,000, and I was doing the math, and I was like, that doesn't add up anywhere close to, like not even close, anywhere to $96 million. And I was like, there's some funny business going on here. And the reason why I was thinking about this is because I was comparing the net worth of Justin Trudeau versus Mark Carney. And Mark Carney has had many, many years of high profile positions and like investment banks and like all this stuff. And then I was thinking to myself, how does Justin Trudeau have like 14 times the money that an investment banker has? I even wrote it in the article here. It's kind of wild. So you have to kind of go through this. And basically what I found out is that, not only did Justin Trudeau completely skew the policy towards his investments, but I think Mark Carney is actually going to do a very similar thing. I went through 20 hours of Mark Carney's last discussions and speeches and things like that, and then lined those up with the funds that are available through Brookfield Asset Management. And this is no secret. This is like mainstream news. Mark Carney was fully invested in Brookfield Asset Management and then created a trust right before becoming prime minister, and then moved 96% of his net worth into this trust, and then put essentially all of that money into Brookfield Asset Management. So now he doesn't own the stocks. This trust owns the stocks. So he essentially moved the money out of his own name, put it in this trust, and then invested all of the money, of course, keeping all of the money in Brookfield Asset Management. So now when he goes in to do a government screening looking for conflicts of interest, of course, he passes with flying colors. So that is what this article is all about. It's very significant. I include a number of videos of Congress discussing this. So this is all this is real facts. And then we go through each investment. It's essentially like funds within Brookfield, and compare that to recent Mark Carney speeches. So this article was very significant. And if you want to take a look at that, You can go to my Substack. I'm not going to go through it in this video. I want to stick to our regular kind of updates. So we're going to do like a trade and investment recap and like a weekly watch list and all that good stuff that we normally do in these bi-weekly reports. So let's first start off with the trade and investment recap. I did a number of things this week. We put out trade notifications to paid subscribers on Substack, notifying them of two different funds that we're actually going to invest in alongside Mark Carney, because my thesis is Mark Carney is actually already making changes to policy and giving out tax-paying money to businesses that directly are directly within some of the funds that Brookfield actually owns. So I was going over in the Mark Carney article about how there is currently $28,000 of taxpayer money going to individuals for workplace training. And what is one of the businesses within Brookfield Asset Management? Workplace training, which is kind of weird, right? So there's a number of examples in that Mark Carney article that I wrote, and we started to make some moves on my end as well. So we're looking to capture some of the gains if Mark Carney continues on this plan to enrich himself by, essentially rigging policy and making decisions on, what things are going to get put in place over his term as prime minister. Then I want to benefit as well. So that's the whole thesis, and we put money into two funds in Brookfield Asset Management. The other thing that we did this past bi-weekly kind of basis, we put money into the Brazil index. Now, we sent out a trade notification somewhere around like here or so, and we're essentially at that point right now. So the thesis on here was, I really hope we don't break out and move higher, but I think we could, and that's exactly what ended up happening here. So we were up quite significantly. I think it was about like 7.5% or something like that since that trade notification went out. We did not trim our position because I see a huge wedge pattern playing out here. And if we go back, look at how long this wedge pattern essentially has formed. And I think there is potential for this whole trend to end up reversing and creating a large cup and handle. So this is a long-term play for me. I was hoping when I was purchasing some shares back here that we would end up pulling back down to this line here. I was a little bit disappointed to see that it ran 7-8% or whatever it was. And then we started to get a pullback, and I did make a purchase right about here. And then, of course, the S&P 500 just sold off yesterday, and it sold off significantly, 2.71%. That's pretty big for a single day for the S&P 500 on this announcement that essentially tariffs are being increased on China. And I wouldn't be surprised if this totally reverses over the weekend, but we saw the opportunity to potentially play for a bounce here. It didn't happen because this whole thing got, put into a loop. I'm still holding because I still want to hold this over a long period of time. And the game plan here was, I hope we pull back to actually, this is the 200-day moving average, and it's probably going to correlate with this other support line that we have here on EWZ. So I'm taking a long-term perspective with this purchase. I hope it does go lower. I think it could actually go 6.9% lower from here, but it's not guaranteed, of course. This whole thing could get reversed on Monday/Tuesday or whatever. Like Trump could make an announcement that these tariffs are totally, he's reversing this after seeing the market kind of collapse here on Friday. So kind of wild. We'll see what happens over the next couple days of this, but we did make purchases, and I actually am hoping that we dip down to the 200-day moving average, and that would be another point where I would throw significant money into EWZ as well. So adding to that position, I already have a decent position in that stock, but we're going to add to it as it goes lower if we get there. So we do this thing on the metals and momentum Momentum bi-weekly report, where we try and learn something new every single bi-weekly report under the little category that I have here, which is the value vein. So this is a minute thing that you can kind of read and learn and become a better trader. This one is more to do with the Mark Carney investment strategy article that I wrote, because in this portion of the value vein, I'm saying sometimes the best traders are those who make policies. The next best are those in charge of reading the policies out to the public. So on screen, I've got a chart, and it's showing you the most profitable Congress traders in 2024. Now, by far is Nancy Pelosi at $24.1 million. Now, who is Nancy Pelosi? Nancy is a former Speaker of the House of Representatives. Nancy Pelosi was the first woman in U.S. history to hold that position, making her second in line to the presidency after the vice president. Nancy's most famous line as Speaker of the House is, "We have to pass the bill in order to find out what's in it." I think that's hilarious. We have to pass the bill to find out what's in the bill. That's essentially showing you her overall philosophy as reading out these bills during her time in office here. So which bills was she a part of? In 2010, she rolled out the Affordable Care Act. That's like Obamacare. The Dodd-Frank Wall Street Reform Act. 2010, American Rescue Plan. That was the COVID kind of crisis there. Infrastructure Investment and Jobs Act in 2022. Inflation Reduction Act in 2022. So how did that work out for Nancy Pelosi? Well, according to Quiver Quantitative, Pelosi's trading strategy, i.e. a model tracking her disclosed trades since 2014, shows a return of 799% versus the S&P 500, which was only up 252% over that same span. In 2024, media outlets reported her portfolio, or Pelosi tracker, achieved a 54% annualized return, outpacing many hedge funds and the S&P 500. So I was saying to myself, I was like, wow, who would have thought a woman in charge of discussing the bills that are about to get passed would also find the time to manage a significantly large stock portfolio that outperformed some of the number one hedge funds in the USA, especially because a number of those bills were absolutely massive. We're talking like 350 pages, 450 pages. I think one of the bills a while back was over 1,000 pages, and people were expected to not only read the bill, but then vote on the bill 14 hours later. So, of course, Nancy Pelosi would be essentially the one in charge of making sure that, these bills get put together. And then on the side, what she's doing is essentially making stock trades based on bills that are about to get passed. If Nance can outperform the S&P 500, I said, so can we. And of course, what do they tell people all the time? It's impossible to outperform the S&P 500. You may as well just buy the index, right? And speaking of the S&P 500, now, full disclosure, I don't actually own any of the S&P 500, but I follow it in the newsletter because I know a couple people that are subscribers do follow it. So this is the movement that we actually saw over Friday, right? So let's take a little bit of a longer perspective first. We've been trading in this like very, very thin channel, and I've been saying for the last probably like month or so that once this channel starts to break, it's going to break significantly. And on Friday, 2.9%, that is significant. Where is the next support line for the S&P 500? Now, we have the 50-day moving average here. I think this there's potential that this all could reverse because essentially this move has happened thanks to the announcement of Trump. It was just like a tweet that essentially is throwing off the market here, right? So kind of crazy how this could all reverse by Monday, but we'll see what happens. I think this is for real, and I think that this channel is now broken. We need to wait until Monday to actually see if this confirms. Like if we don't close back within this channel, then that is significantly bearish, meaning that the S&P 500 should go much lower after that. So how low could that be? Let's actually take a little measurement here. So I'm thinking that we could go 6.2% lower, and that would take us back to the support line that I've drawn out right here, this horizontal line highlighted in red, and this would essentially erase the gains that have happened over the course of the entire year. So this is why I don't invest in the S&P 500, because I just think it's so ridiculous. There's too many things out there that could pop this S&P 500 bubble. And if we zoom out a little bit further, like we've just had a massive run on the S&P 500 over the last little while, especially due to COVID. Like we're talking, yeah, we've essentially doubled in the S&P 500. I'm looking at the SPY, by the way. There's so many ways to look at the S&P 500, but I'm looking at the SPY, and we've essentially more than doubled since 2020, which is kind of crazy to think about. So these are massive yearly returns, and I think we're in this like almost blow off top kind of thing, and I think we are headed much lower. So this is why I don't invest in the S&P 500 right now. And if you're looking for diversification, the S&P 500 is not a good way to diversify, because right now, essentially 90% of your money is in like 7 stocks. And that is like the Mag 7 that people always talk about. So not a good time for the S&P 500, but major support is about 7% lower. In this article, I was going over the EWZ kind of thing. We just went over that, but one thing I do want to discuss is silver. Now, silver has had an absolutely insane run. Like this goes back to 2022. We entered into this channel, and we created this channel, and we've essentially been floating upward ever since. So the silver just hit like $68 or something like that Canadian. Now I'm looking at it in American price point, in American dollars right now, and we can see that we've just had this astronomical move, and now of course, you know, since the S&P 500 is coming down, silver is such a small market cap that if the S&P 500 is crashing, then you can almost guarantee that silver is crashing as well. So we've seen that recently over the last 2 days. You know, we've just seen big candles lower, and I'm expecting, I would hope that, you know, silver reaches back down somewhere around here. That would be fantastic, and that would be an amazing buying opportunity if we can get silver closer to $40. It's probably going to be more like $41 by the time we get here, but somewhere around here would actually touch this top of this channel, and then we'd be expecting a fairly significant bounce, especially if it happened over the course of like, you know, a couple trading days or something like that. Like it would be like a huge leg lower, and then increase the chances that we are going to get a significant bounce, assuming that the S&P 500 isn't like nosediving at that period of time. Because if the S&P 500 is going down, then silver is going to get sucked down into that as well. So that would be kind of how I would be thinking about it. If I owned 0 silver, I would just buy here. But if I didn't own any silver, or if I did own a significant amount of silver and I was looking to buy, it would probably be around that $41 price point. Now, if we enter back into this channel here, that's not good at all. We could be potentially going back down to $32, and I would say some serious strong support, probably around 36, 37. This 200-day moving average is going to increase as even if we continue to drop here, and somewhere around $37 would be just like a no-brainer. It would be an absolute gift if that were to come down that low here. So That is kind of the overall bi-weekly report. That's the free tier. Now, under the paid tier, there are a number of different things. Like, for example, we go over a full stock market portfolio. I call it the stoplight stock section. If you're somebody who is interested in investing, but you're not exactly sure on, when to buy, when to sell, I create an easy little chart that you can kind of view. And the reason why I call it a stoplight stock section is because I just give you a indicator, whether it's green, yellow, orange, or red. Then it's just a quick indicator that you can actually look through and then browse all the tickers that I am super interested in. Like, for example, the Mark Carney stocks that we just discussed in the article, those like a full transparent view of what I'm actually buying is available in the paid tier. And then of course we go into a little bit more detail into the stocks that I actually own. One thing I will give you in the paid tier is this section right here. Near the end of the paid tier, we talk about NAT. Now, this is a stock that we've covered multiple times on the free tier. And I will mention that we're actually forming a bull flag on NAT here. So I purchased almost right at the bottom. It was actually just like perfect timing on the bottom here prior to starting this newsletter. And we've seen it just absolutely huge rise, and my price target was right at the tip of this channel here. So we not only did I nail the bottom, but I also have nailed this recent top. Now what's interesting is we're forming a bull flag. So this consolidation pattern here is actually very bullish, especially if we break up. Then we could start to make a push up to $4, and this is something that I'm gonna essentially explain in the paid tier of Metals and Momentum. So if you're interested, hit the subscribe button on our YouTube channel, hit the subscribe button on the Substack channel as well. You can get the free newsletter in your email address on a bi-weekly basis. I try not to send out too many emails throughout the week and just give you that full report on a bi-weekly basis. But if you sign up for the paid tier, then you're going to get those trade notifications that tell you exactly why and when I am buying. So if you're interested, sign up for that. My name's Anthony. Thanks so much for watching, and we'll see you in the next one.